Traders will closely be watching the ECB's policy meeting today. Joining me for a reaction on what we can expect is Dr. Ivo Pezzuto. He is a professor of global economics over at the International School of Management. He joins me now from Milan, Italy. Dr. Pezzuto, Ivo, nice to see you again.
Hi, great to see you again. Good afternoon, good morning, everybody.
Yes, well, this meeting from the ECB, it was greatly anticipated because they want to know what will happen. As we know, in March, they left things unchanged. So what can we expect from today's meeting?
Well, Daniela, yeah, this is a great moment because of the reopening of the economy and, everything. It's a very, moving very fast, very exciting right now because of the vaccination campaign and the economy that's basically gradually accelerating its recovery. It's creating a lot of enthusiasm and also expectations about growth, but also concerns about policy for central banks due to rising inflation in a number of countries. So yeah, there is this governing council meeting of the ECB, which will, there is a lot of expectations about that. You know, what will happen to the emergency pandemic asset purchase program, the PEPP, which is currently, giving 80 billion euro per month, and also of liquidity, and of course concerns about whether they're going to do some tapering or whatever related to that because of rising inflation and other things. In reality, we don't expect, as most the economists, and the general consensus report, we don't expect major changes, at least not short term, and not before the end of the year, when the economy and the vaccination campaign and the full recovery and reopening of the economy will be faster and broader, or in the beginning of next year, middle next year, when probably this emergency pandemic program will be ending, and the standard QE program will continue. Why this? Because basically, there is still a sort of gradual recovery, still some vulnerabilities, fragilities. So the economy is growing fast. There is an expectation in Europe that by and large, at least based on the data from the OECD, there is expectation that it will grow around 4% or something like that. So, of course, not evenly among the countries. But if you think about, for example, in particular, inflation, what we see today is that the acceleration of the pandemic, there is a return on inflation, which is happening, which could be also good in terms that we were not reaching the inflation targets, close below or close to 2% in the last few years. So the fact that we do that might ease the debt burden for a number of countries that have been, had a lot of excess debt during the pandemic in particular. And also it's helping because now we are getting closer. We are basically reaching 2%, 2% in the European area, which means basically this 2% headline inflation, but then has to be analyzed more closely with the 1% core inflation, that is excluding food and energy component. That basically means that if you connect that 1% core inflation, 2% headline inflation, and the 5-year forward inflation expectation rate, which are anchored at 1.5%, you understand that basically there is no major overeating right now. You have a Eurozone CPI, Consumer Price Index, which is expected to be next year to 2022, 1.2 and then 1.5. So there is no big pressure at the moment, despite the difference among the countries of different inflations.
Well, the situation is a little different here in North America. As you know, the Fed here struggling with inflation. There's a great debate. Is it runaway? Is it not? Is it transitory? How closely do you feel the ECB is watching what the Fed is doing here?
Well, very much, very much. The US, because of the massive fiscal stimulus and monetary policy they've actually deployed in the markets, have really changed the global scenario stabilize the global scenario for a number of countries, not just the US. So they're following very closely. The US, if I remember correctly, there was a 4.2% inflation in here in May, now in May. So basically the point is that, of course, there the concern is bigger because there was a faster recovery. Now, we all expect a sort of a V-shaped recovery or something like that. The US had a booming recovery, and connected with the shortages in components and commodities and disruption in supply chain, like in particular, computer chips, automobile chips, and so on. All this stuff and people working from home, remote working, they need computers and digital device. All that, and students working from studying from home, all that created this big demand, which is triggering major, massive inflation, fast inflation. So, of course, there is also the digitalization of the economy. So there is more use of that stuff. I think that the US is probably feeling more the heat, and there will be more response sooner or later from the Fed. If you think also that there is the Build Back Better program by Biden of massive infrastructure. Now, if you remember correctly, until last year, most of the money that came from quantitative easing went into the financial assets and the property housing market. Now, this stuff will go into the real economy, meaning infrastructure stuff will go into the real economy, plus the fact, in addition to the, subsidies and unemployment benefits that they received, excess of cash and savings, all that will reverse into the real economy. So we might see in the US, combined with the shortages and the supply constraint, there might be more pressure on that. There might be a little bit of more pressure. We've seen the Fed recently doing something with the reverse repo purchases, which is a way to fight inflation, to reduce money supply in the market.
Last question for you, Ivo. Since we last spoke, and I know I got your thoughts on the emergence of a digital euro. It seems that the path to that reality is one step closer. Christine Lagarde becoming more vocal on the topic, saying they're closely looking at that possibility, that future. Of course, it's not happening in a 1, 2, 3 year time frame. Somewhere perhaps in the next 5, 6, 7 years. But how do you think that would be embraced by Europeans?
Well, I think it positively. Now there is a big excitement in Europe about digital transformation. As you know, 2 of the major projects related to the next generation EU funds, this 750 billion program that's going to support the European Union is going to give with loans and with basically grants support to the recovery of Europe, will be dedicated mostly to a green economy and digital transformation and other modernization infrastructure changes. So the digital part is a big one. And in addition to typical things that are already ahead of the game, like fintech and other activities, a lot of digitalization will come also in the payments, and in this digital payments will definitely help us. Europe can only benefit. There is a positive expectation on that side. I'm sure they're going to move very fast. As soon as the infrastructure, the mergers with the local system infrastructures and the European infrastructure will allow for this. I know there is a lot of collaboration projects between the central banks and national central banks and the European Central Bank to move forward about this infrastructure integration to facilitate this process, which will be coming soon, very likely.
I'm surprised to hear say that it would be embraced positively, because what about the issues of privacy? Would that not surface?
Yeah, that is correct, but that depends very much on the framework and the configuration you use it. If you use a configuration in which basically the central bank bypasses the banking system, that would create concern from what we see, because it's a sort of more surveillance state type of approach in which the bank's minor role and the central bank is actually monitoring all transactions and everybody. I guess with the more privacy protections, with the Europe, there is a lot of concern about privacy, a lot of concern about governance, a lot of concern about cybersecurity. So there is a lot more collaborations with the stakeholders, with the national central banks and financial institutions, to make sure that there is no excess control. There is more better plan, very controlled way to protect people's privacy and data protection.
Okay.
The rollout would be more, more scrupulous.
Dr. Ivo Pezzuto, I always appreciate your thoughts coming to us from one of my favorite cities in the world, Milano. Come back anytime to StansberryInvestor.com. Thank you so much for your time.
Thanks to you. I look forward to seeing you again. Thanks a lot. Bye-bye.
Thank you. And thank you for watching. We'll have much more content coming your way. So be sure to stay tuned to StansberryInvestor.com. In the meantime, remember to share us where you watch us. That's it for me. I'm Daniela Cambone.